little bit about, I've got two questions actually, if you could just bear them in mind. One of them is around, specifically the pitfalls post-IPO in terms of managing the share price. Because, as we discussed, most leadership team members and CEOs will get their ability to liquidate their stock after a lockup period. And that lockup period, could be 9 or 12 months. So it's critical to sustain the share price above a certain level. Otherwise, management can end up making nothing. I think of an example, I won't name it, but, let's just say an emerging markets e-commerce player listed in New York in the last 2 to 3 years. I happen to know it because I was an investor in it at the pre-public stage. And it's ended up, I don't know where the share price is currently, but like the other two examples I mentioned, it's sitting at about $1. Okay, so Swivel's at 92 cents, Sangami, Spotify regional equivalents at about $1, and this particular e-commerce company was floundering at $1 for eons. I know for a fact that most of the management team ended up making nothing, which is a very sad outcome for 5 years' work and for a whole kind of liquidation event that they and their families were looking forward to. So question one is, how do you avoid the pitfalls of that classic pop and bust syndrome in public markets? And my second question is the criticality and training and tutoring and mentoring, I should say, around narrative for CEOs. How do CEOs build their storytelling capability? Because it sounds to me like being able to tell your story really well is a key component of public market success.
Well, let me do the second one first, and that's just all around proper mentoring the CEO. Some people have got no idea. Okay, they might be brilliant CEOs, but they need to build a new capability. But it shouldn't just be the CEO. I think a lot of it has to happen through the CFO, who's probably might be more suited to that, hiring someone that's got that kind of experience as a CFO. And some of that can be, and you have to hire some strong IR professionals, in my view, who can help. But then also people like us who work as partners with companies can actually. I've always found you need someone that good CEOs need independent board members and outside people that they can talk to when they've got a problem without feeling scared about doing it, without feeling vulnerable. So I've had all sorts of relationships with subsequently in the LSE, I've been on all sorts of boards and advisory boards, and I work closely with the CEO and tell them that they need to focus on X, Y, and Z. And part of that is around communication and absolute clarity around what the equity story is. So you have to teach that, and you need help. Okay, but most people can do it, and they get it. They're intelligent people, but they need to be able to put the time in, and the CEO needs to be able to block out X weeks a year to go and talk to shareholders. You have to invest the time. Okay, so it's learning and investing the time. Now, the pop thing is how you manage this. You can't manage a share price perfectly, clearly, because there are external factors. But what you can manage is investor expectation, and keeping investors informed. You've got quarterly reporting and people understanding what's happening at the company. So it might not, things don't always go smoothly. So things will go wrong, but rather than just trying to hide it, you need to be very transparent with your investors. And they accept that. They accept things don't always go right. As long as they understand where the company's going to, there might be some bumps in the road. So that's generally how you do that. But when it comes to kind of the exit bits, my view is, well, I've got a slight purist view, which I think an IPO is not about exit. It's part of exit. It's mainly around accessing growth capital to give you more growth going forward. So if everyone wants to exit on day one after a year, then that's a very, very bad signal. And the people should better crystallize some value, definitely. But they should also be thinking about the future and believing in the next 3 to 5 years of the company where they can make a lot more money. So getting investors to understand that, they can say, look, some of the management team are going to be selling X, Y, and Z shares for particular reasons, but they're in there for the long haul. You have to keep that otherwise you'll lose investor support, in my view. So all of this stuff is manageable, okay, but it's around hard work and managing the investor in the right way and creating a kind of, when it comes to the reporting, some of that's around automated process. So it's putting the management time in and automated process and having the right kind of advice. You do need independent advice. Without that, you will flounder and you need CEOs that can actually be humble enough to listen to the advice.